Let's welcome on board Abhay Soi, the CMD at Max Healthcare Institute, joining in on the show right now. Abhay, hi, morning. You're undergoing a major capex currently, and every quarter a new facility is getting added as well, which I'm guessing will definitely push your OPEX too. How is it that you're managing to ensure resilient margin performance and the next 2 to 3 years? Where is it that you see your margins headed?
Look, I think if you actually see, this has been the 12th consecutive quarter of year-on-year growth that we've had, and the highest ever quarter. So it's been 12 consecutive quarters, and this only happens through extremely, I think, obsessive focus on execution. We continue to execute. We continue to generate numbers. We always guided to the fact that 85-90% of our total expansion is coming through brownfields, where the break-even is a matter of months, not a matter of years. And you get huge amount of operating leverage. And you've seen that with the newest brownfield, which was Shalimar Bagh. Previously, you've seen it with Vaishali Hospital brownfield that we've done. So, we will continue on the same trajectory. I think as far as the sector, we are today generating alpha amount of cash flows. As you see, we are a debt-free company now. We've added, but we have over 1,300 crores of net cash sitting on the books. We added about 440 crores of free cash flow post-capex, pre-capex, but post-maintenance capex to our kitty this quarter itself. But at the same time, there's such a phenomenal opportunity, an attractive opportunity to invest in this sector. We can't imagine a better time to do so. So we're using all of that cash, and we hope to deploy it at very attractive terms within the sector and really embrace the opportunities that the sector is throwing up at this point in time. I mean, really, India and the sector both are once in a lifetime sort of story right now.
Okay, but I also wanted to discuss your occupancy levels because that's inched up to 77% in the quarter gone by. A, what has aided to this growth? And secondly, when the newer establishments do scale up, what kind of occupancy level should we expect then?
With respect to the occupancy levels, so you need to look at operations on a year-on-year basis, not on quarter-on-quarter basis. And our increase in number of occupied bed days has been 3% over same time last year. So it was pretty much in line with the expectations. And it's also in some part got to do with the seasonal effects, because this is the season when you have a lot more medical patients because of dengue and some of the other seasonal diseases. And therefore, I sort of always encourage occupancy numbers to be compared to same time last year. But in that respect, also it's been healthy. It's been 3% increase in occupied bed days. With respect to the new facilities, with the new facility, which is Shalimar Bagh, collectively last quarter, the new beds and the old beds were operating at about a 78-79% occupancy level, and with EBITDA margins of about 38 to 40% from that facility. So it's ramped up very well.
Right. And last quarter, your ARPOB was also 5% of an increase in the total billing for the PSU contracts. You expect a revision coming in there?
Increase in the PSU because of increase in CGHS rates had an impact of about 14 crores on our EBITDA. 14 crores on our revenue in the last quarter, or in the present quarter, which we just passed. And we were expecting further increases in this quarter itself, which have not come through as yet. One hears they're still in the offing, and we are hoping it should come in the current quarter now.
Okay, and also give us an update in terms of the capex plans. What's the progress on the capacity additions that you had planned?
We've been having great progress on our ongoing plans. The one which will come up the soonest is the Dwarka Hospital, where the developer has now applied for occupation certificate. So we're quite hopeful before at the end of the financial year, we should have that set of operations started. Thereafter, Nanavati, which is Mumbai, is quite on stream. We're expecting that to come through by the end of next year. And, so on and so forth. There were historically some delays as far as the Max Smart, which is the Saket project is concerned. But that's also picked up speed. We finally got the approval for tree transplantation, etc., and that is in the works. So that's back on track now. We are looking at adding about 2,200 beds, I think, over the next 3 years. And all of it is pretty much online.
Right. Now, when it comes to post-care hospitals, what are the plans regarding if you would have any acquisitions, any segments or areas which you would currently be interested in?
Plenty of opportunities that we've been looking out for and we continue to look out for. I'm quite hopeful in the very, very near future, we should be announcing some. There are all different opportunities, different projects in our pipeline, which are at different stages. It's not done till it's done. But we are quite hopeful. We should be, perhaps a series of them should be coming through, given the robustness of our pipeline.
Okay, so that point is taken, but a lot of hospitals are reporting better numbers due to improved payer mix as well. How do you see this trend shaping up in the industry?
So the international business has gone up. It's gone up by 25% compared to the same quarter last year. Collectively, it stands at about 9% of our revenues now. As far as the institutional business is concerned, if I look at ex-Shalimar Bagh, which is the expanded capacities come down, and if I compare apples to apples, the number was 28 or 29% last year. It's come down to about 25% of our total bed share. So there has been a reduction of 4%, and therefore it should continue gradually in the same light.
Right. Tell us a little bit about the growth plans that you may have in the lab segment.
So we've had in the lab segment a 32% increase year on year. We've had, and a 15% quarter on quarter. So it's quite a healthy sort of increase. We are looking at some opportunities for acquisitions, etc., but these are smaller, more viable ones. But nevertheless, they've been very encouraging trends, throughout the last few quarters, where not only has the profitability increased, but also there's been a robust growth both on year on year and quarter on quarter basis. So, we feel quite good about the business.
Okay, Mr. Soi, on that note, we'll let you go. Appreciate you making time and speaking with ET now.